investors keeping one eye on the Gulf, but the situation in Europe, well, it's getting to become a bigger, even bigger concern. Joining us right now from London to talk crude and other commodities is Francisco Blanch. He's commodity strategist at Bank of America Merrill Lynch. Francisco, great to have you here on In the Loop. Let me ask you about the trade we're seeing in oil. It's down about 15% since May 3rd. How much of that has to do with really the uncertainty over the Greece situation and the European sovereign nations?
Well, I think a lot of the drop in crude oil is related to that potential slowdown in the European economy ahead. If you look at the sharp drop in the euro, which has also gone down quite rapidly in the last few weeks, that has been a big influence on the price of oil. So it is a big. I think it's actually the reason why oil is going down is because the European economy is suffering.
Well, let's talk a little bit more about the euro specifically, hitting 125. So we keep hitting a new low after new low here. What's your outlook for the euro? More pressure?
Well, you know, as a house, we remain euro bears. We have been for a while. You know, we've been euro bears since the euro dollar was at 150, and still believe we will go down to 120, maybe even lower. And one point to remember is that if the euro goes to 110 or parity, it's very, very hard for a barrel of oil to trade at $85 because that would mean 85 euros.
Right.
And that's exactly the price that we had at the peak of the oil market when euro dollar was 160 and oil was 140.
Well, where do you see oil prices headed, let's say, over the next 3 months here?
I think over the next 3 months we are going through a soft patch, and it's going to be hard to experience much upside pressure here. So it's not clear we're seeing a double dip yet or anything like that. I mean, I think you know, the European governments have put a big backstop to European growth in terms of the action in the financial markets, but there are going to be some spillovers to real activity, and that will probably create a soft patch for the next few months. So I would definitely be quite cautious as to establishing long positions here. Now, as we get through a soft patch, things are looking quite strong. Again, emerging markets still performing well and could see accelerating growth once we've gone through the slower period.
All right, so Francisco, pressure on the oil trade. What about gold? Because we've got gold hitting a record for another day. It's headed for a fourth weekly gain. Where do you see gold prices maybe topping out here?
Well, we think gold is going to continue to push higher. We see gold trading at around $1,500 per ounce sometime next year. And the reality with gold is that there's a lack of confidence in fiat currencies. We have been gold bulls since the Lehman crisis, because again the next step of the next logical step of the financial crisis was effectively a sovereign crisis, which is what we're now getting.
Right.
So we like gold, particularly in euros. We like gold in pounds. So the currencies that are having to respond very aggressively to suffering economies. So I think gold is still has some way to go.
All right, we got to run. Francisco, thank you so much. Francisco Blanch, Bank of America Merrill Lynch, joining us from London.